I would very much appreciate to be with you in Cape Town now, but you're not in Cape Town as well. I remember this session. I was participated personally 2 years ago in Cape Town. It was quite a great event from the business point of view. And I have to say it was the first time in Cape Town, which was a great event for me as well.
Definitely. I mean, being in Cape Town, you know, at this time is always a nice period, and not all behind our laptops.
Deji, where are you staying just now?
So right now I'm in the UK, but I will be back in Lagos by weekend. So I'm really based in Lagos. That's where I work from.
Okay.
Yes.
And Brian, where are you coming from, or where you are signed in?
Yeah, I'm located in Accra. I'm actually from Ghana.
Okay, great.
Yeah. So, and how about you?
Well, in Germany, from Bonn.
Wonderful. Yeah, I think after the call we can have quite some chat about some of the things that all of us do, just so we can figure out ways to enhance support for the sector.
Yeah, would be great.
Correct. Yeah.
So I'm not sure, can we see the number of participants already? We have 5 minutes past 3 or 5 minutes past 2 in Germany, wherever.
Yeah, I think there are about 12 people. So if the session is open, my guess is we can start.
Yes, I think the maximum we should wait for 5 minutes. So then let's start. Well, a warm welcome to the participants. I'm not sure who already participated the last 2 minutes, caught already some messages from us, but now we will repeat them officially. So my name is Johannes Buschmeier. I'm based just now in Bonn, in Germany. And well, I will do a presentation of AFC a little bit later. So I would hand over to Deji first to introduce himself, please.
Yeah, thank you very much, Johannes. My name is Deji Adebusoye, and I'm a principal with Sahel Capital Agribusiness, a private equity fund manager based in Lagos, Nigeria. And I will share more as we go on.
Mm-hmm. Okay. And please, it's up to you, Brian.
Yeah. Yes, my name is Brian Frimpong. I'm the managing partner for Zebu Investment Partners. We're a Pan-African private equity fund focused on investing along the agricultural value chain. And as the session goes through, we'll probably talk more about how we add value to some of the outputs from farmers all the way to the tables of consumers in Africa in fostering food security on the continent.
Yes. Thank you. So what we agreed is, after this introduction of the speaker, we would like to give you a brief presentation on AFC. We are a consulting company that exists since 1973. We are working in the field of agriculture and financial sector development. And we pointed out some important things for this topic. And our idea was to start with this one, to the more general presentation from the consulting point of view. And then definitely we hope to come into a good contact, into a good discussion again with Brian and Deji. I'm trying to do this presentation in a maximum of 10 minutes so that we have still sufficient time for the discussion. Yes. This is the content. I will directly start with this just to give you an idea. This is references made to the last 13 years. Why? Because at that time we joined Gopa Group. So we are AFC Agriculture and Finance Consultants. This means we are focusing on projects in agriculture and financial sector development. Just to give you an idea, this is the total number of projects we have been implementing for the last years. If we would look on the last year before Corona, but yeah, fortunately it didn't change too much, Currently, we are implementing approximately 80 projects all over the world. 2/3 of them are in Africa. Implementing projects for us means we have approximately 60 people in our headquarters in Bonn. And what is maybe even more important, we had last year, it was in May 2019, we have approximately 750 staff members or in the field, in the projects in various countries. And our turnover for consulting services is approximately 30 million. When we talk about these topics, food processing, investing in the demand for processed products and alternative protein products, we as agricultural economists or agricultural people, we always refer to the agricultural value chain. I think maybe all of you are aware of it. What does it mean? You start with a primary production or even with a specific inputs. You might come to the processing, to the trade, and finally to the consumption. The agricultural value chain definitely changed, and we are highlighting very much at the beginning the processing, because in this forum we are talking about investment to try to give an answer where to invest and why to invest. I think in Africa you have a growing demand for processed products, for high value niche products, and what is very important for us as well, nowadays worldwide we have approximately 30% of losses, which means from the production and primary production, 30% of the produce is lost in harvest, is lost in storage. And I think it's very important to optimize it for economic reasons, but for ecological reasons as well. Of course, we have the Sustainable Development Goals, and with this we can cover 4 development goals, which you see. I will not repeat them here. We have in Africa in general economic growth, we have population growth, we have urbanization, we have youth, we have exposure digital media. So what is we are talking in this slide is about the local market. And you have difference in the dietary, where you might have difference in the demand in African countries. Well, Africa is a huge continent, so each country is different. We are fully aware of it. But what we are assuming is, and you know the supermarkets in a lot of countries in Africa, at least in the cities, you need processed food out of the reason you have mentioned, and this might be a reason to invest in processing for the local market. However, if we look on the export-driven market, there is already a reasonable number of products that are exported from Africa. You see fruit, vegetables, dried nuts, you see spices, you see growing specialty markets like coffee and chocolate. However, but when you listen on some people and say, well, what is about chocolate? Is it really produced in Africa, or is only the cocoa produced in Africa? Then it's exported to Europe, and finally you import the chocolate again. So which means it doesn't make a big sense. You have the value adding not in Africa, but in Europe or wherever. So there is definitely room for improvement to add value. So you need sustainable initiatives if you want to go for the export market. You need ethical sourcing, organic free format pesticide products might be important. In Europe nowadays, if you import products, people look on social standards, you look on traceability, on high quality products. So for the export markets, maybe the challenges are a little bit higher. So the investor has to see what is most important for him. Challenges across the value chain. It's very important. We are talking now about potential investments in the value chain. However, afterwards, you have to make sure that you meet the local demand abroad and in the country. And it's essential to identify the primary producers, farmers, including smallholders, and their role in the value chain. a lot of agricultural primary production is produced by smallholders, whatever smallholders in Africa mean. You might talk about farmers that have only half a hectare. In other countries, it might be farmers that have 20 hectares and they are still considered a smallholder, but they are and will remain very important for the processing as well. And this is finally, you have to see the coordination, trust building between network of farmers, processes needed to overcome these challenges. And I think most of the investors who are interested in processing, they're not necessarily interested to invest in primary production, because this means you have to lease land for it, you have to set up the primary production, and this is normally not what investors in processing are aiming at. By the way, in Europe, in all countries I know, it's normally never connected. You have the sector of primary production and you have the sector of processing. What is then important? You need a steady, good quality supply of these, whatever products it are, avocados, whatever, pineapples, whatever. And I think in a lot of companies, investors, this is underestimated. Our experience, they might assume that if you set up a plant, local people would be happy to bring the products to you. But however, they might do it, but only if you pay higher prices. And of course, they will only do it maybe in a period where the harvest is on the highest level, which means your plant might not necessarily be utilized for a longer term. And this is how we as consulting company have been stepped in. We work with farmer groups, we try to give extension services to help in the transportation, in input supply, setting up different schemes. And what is very important, you have to get the trust of the farmers first, and then you can start with the farmer groups in all different subjects of opening of bank accounts, traceability schemes, whatever is mentioned there. I try to do it fast as possible, So the approaches and solutions in business development, I think to repeat a little bit, you have the market side, the demand side. This is Messe Berlin, where we have normally a very huge food exhibition in January, which will unfortunately not take place this year. You have to see, well, what is about the demand, what is about social standard, about your business plan, supply chain relations between producers, processors, and providing accompanying advice, the subjects I try to touch. And well, I was hurrying through it a little bit fast maybe, but I really tried to stick to the 10 minutes, which I finally did. And I'm of course open for all questions. And I would directly ask that it's not a big monologue here, maybe starting with Brian, that you might comment on it as Cebu investment partners. What is relevant for you in the value chain? What do you attract? Do you have similar experience with challenges, or how does it work with Cebu investment partners?
Yeah, thanks, Johannes. Great presentation. It makes actually discussing the successes and the challenges on the value chain a bit easier for us to sort of walk through. And so Zebu is designed to invest across the value chain. You had a slide on inputs, production, processing, trade, consumer. We have a portfolio company alongside all these value chains. So it has enabled us sort of figured out how to make some of these companies much more integrate into the ecosystem in which they operate. And just bringing it together to the theme for today, which more or less would be is food processing and value addition. what we've done over the past, 8 years of Zebo's existence is that in addition to investing in companies, we have this technical assistance facility that enable us look at what else we can do to, if it's a factory, to help smallholder farmers increase their yields and bring these yields on board to the factory. Johannes, you mentioned, the assumption that people would think, okay, they will sell to the factory when the factory is done. But what we do is we analyze the volumes, we analyze the yields, we analyze how many farmers, we offer training to the farmers, we offer mechanized support to the farmers, because you have to make their lives easier for them to build that level of trust and say, okay, I'm confident selling to this factory that has helped me improve my grain outputs, which then allows them to always sort of loop in a feedback mechanism. A few things that over the past 20 years have helped us see the progression of Africa's industrialization is that the infrastructure, it's improving. Thankfully for Zebo, most of the LPs are pension funds, DFIs, etc. And so some of these DFIs too are investing in power supplies to rural areas, road infrastructure to agricultural lands, which are very important. And we've seen that happen with one of the transactions that we worked in Cameroon. The government came in and supported with road networks, power access, and now the company is the largest private pig producer in Cameroon, offering jobs and training to about 200 plus people in the community, because in addition to just the piggery, there's intention to do an abattoir, and then there's an intention to do a supply mechanism to the last mile retailer, who would then sell to the consumer. And so that progression in infrastructure, although you see quite a bit of urbanization happening in many African countries, has helped us sort of bring food value addition to the table of consumers. And it's also prevented the waste factor. It has minimized the waste factor that you mentioned, that because of lack of storage and processing alternatives, sometimes at harvest or at the time when things are matured, you can convert them into forms that consumers want. And we need to understand the growing needs of the African consumer, that for them it's accessibility, price, and then the food safety element. And so I see all these positive things that some of the companies that are portfolio company, some of the companies that are, we've invested in, actually are providing solutions to address the food security along the continent. And there's quite much more to do, because the demand for capital way out exceeds the supply of private equity funding for the sector. But over time, these are what you presented, Johannes, and I'm sure Deji will add to it, very spot on in terms of Zebo investing in processing companies across the continent, inputs, consumer companies, and very soon we may even support trade finance to that extent.
Very interesting. Thank you, Brian. Deji, your view on this. I would like to raise the same question. At what stages of the agricultural value chain are you mainly involved, and what is your concept?
Yeah, thanks, Johannes. I would approach the question from a slightly different perspective. So the way at Sahel Capital, for the sake of those who just joined, I mentioned we're a private equity fund manager based in Lagos, and we invest in the food and ag sector, primarily in the Nigerian market. And aside the macro conditions that typically everyone would look at, which we would also look at, the basic fundamentals that we would think about when we are thinking around the agricultural value chain and where to put our invest in is usually subject to demand and supply at the end of the day. So if you think demand, I think your presentation already well answered that question, talking about just the size of the opportunity. You have the market, you have the growing population, the young population, the change in dietary habits, improved consumption of protein, just the sheer sophistication of consumption is very prevalent. So the demand side is very much checked. However, when you move over to the supply side, which is where we begin to make a lot of inroads into how can we address those challenges across the supply side. And I'll think about it from four perspectives. First is availability of the input. So if you think about it, one of the major questions or debates that we've been having on the continent is issues around local competitiveness of certain value chains. Should we even be doing it on the continent, or should we not? So the way we like to think about it is we look at value chains that are that the country is locally competitive in. So you will see us playing in the rice space, you see us playing in cassava, you see us playing in shea nut, because these are value chains that we are competitive and we can really become global leaders with time and with the right investment and support. And all the things surrounding that with investment in outgrower programs, ensuring that you can make those things available in the market. The second is around consistency. Now, even if you have these products available, Nigeria, as you would all guess, is a largely rain-fed agroeconomy. So very little irrigation led cultivation happens in the country. So we like to think from the perspective of how can we drive consistency in the supply of this raw material into the market. And that's why all across all our investments, we like to think in that way. So for example, the rice investment we made, we invested in about 8 kilometers of flood canal just to be able to irrigate the farm, and several kilometers of secondary canal. And there's been all year round cultivation happening on the farm, and that is able to help us drive the story around consistency. The same thing with the poultry farm as well. Consistency is key to the theme that we like to play around. The third is around reliability, and this begins to play into how we think around the entire value chain. Even if we have the products available and we have them consistent, the problems still come to logistics, transportation, infrastructure, power. And I was very happy when Brian talked about how they have been able to integrate, even the government coming in, some of the DFIs coming in to solve that gap, which our own type of finance would not be able to address. But in the way we can, we like to. So for example, one thing we like to do is look at how can we integrate transport logistics into the activities of the companies we invest in. So cold chain, we've integrated into our dairy company, we've integrated into our poultry company, and we also actively looking to invest in logistics and transport companies that can help address that gap. And the last is around sustainability, and I think Brian touched on that. It is extremely important to the way we think about investments. How are we driving environmental standards or compliance? How are we driving social compliance across our investments? And we will look at all these investments from that lens. So to answer your question, when we think about the agricultural value chain, we play across the entire value chain, just to the extent that we can integrate across all. So you will typically not find us just doing primary agriculture. We want to go into processing, because that's where we also can typically magnify value along the line. So we play across the entire value chain, in Nigeria where we invest today, and even in future investments that we'll be doing beyond Nigeria.
Yeah, well, thank you. I think we are all in the same opinion. When you invest, normally you do it more in the processing sector, and of course there are quite a lot of challenges. How do you see it for yourself? For an investment coming to a special country, would you start to invest in a company that service the local market, or is there the reasons for how are you doing it yourselves, more for the export market? I remember in my career so far, by investing, a lot of people at the beginning, they thought of always of export, not on the domestic market. But I think from your answers, there is a little bit of switch as well, maybe to look more on the local market to get your repayment of the investment. What is your experience with this?
Okay, I can kick it off with how we think through this at Zebo. So our primary actually mandate is to support domestic markets and then domestic economies in which we invest in, and which includes even import substitution. For example, Deji mentioned rice cultivation, and a lot of Africa countries, Nigeria, Ghana, and others, import significant amount of processed rice into their countries, and the consumers actually are demonstrating growing demand for rice just because it's easy to cook, it's easy to add other condiments, and lifestyles actually requires very fewer number of minutes to cook and consume the food. And so such a business allows us to support the domestic economy because you provide employment, and the social capital to that economy is significant. So far as there's water, canals, etc., and the environment is ripe for production. So import substitution is great for us. However, there are cases where we've also realized that production for exports is good for that domestic economy because the country may have excess of that product, and beyond producing to serve the domestic economy, you could actually export for pharmaceutical or other food uses. Again, Deji mentioned cassava value chain, which is a classical example that you have quite a lot of people that consume cassava locally, but they could also be converted into beer for lifestyle consumptions in the local markets, as well as for other products, starch intermediary products for additives into medicine, which may still be imported back into the country if the if there isn't a strong pharmaceutical enterprise within the economy. So we've seen this where the moment we touch some of these companies in terms of supplying capital, providing them with the right support to recruit engineers, etc., then the domestic or the local ecosystem then gets quite a bit of support. And most of the time, with the right agricultural practices, that issue of consistency then becomes a matter of solution. We're currently looking at a pineapple value chain where it takes about a year to grow pineapples, and we're helping a potential company to design the right sort of growing practice for its local farmers, and this may require about 1,000 to 2,000 hectares of grown pineapple in West Africa, and we're talking about smallholder farmers of about 200. So this is a scenario where jobs will be provided to the farmers. They will learn something. The net effects on the economy would be recruiting people to come and work in the factory, and then selling to the domestic market. Logistics, consumer, grocery stores, etc., would all complement the importation of fruit juice drinks that come into the country, and then minimize the waste of pineapple harvest that we see during if you leave it to just a crop cycle during the peak season.
Brian, maybe one additional question that you mentioned: the smallholder farmers, the number of smallholder farmers you need. In my presentation, I was raising more the point how to deal with them in terms of extension service to set up groups. But finally, they might need inputs. They might need money for refinancing.
Yeah.
Is this a subject you are covering as well as a producer, or do you leave it to local banks?
Yeah. No, absolutely. So it's a key subject that we cover. We actually, our funds, actually, we have two funds where the first one had a technical assistance facility. We're finalizing, we're putting some final touching points to the second funds whose TAF would come online very soon. But what we do is we look at scenarios that maybe the suppliers, the farmers may need, and then figure out input box solutions for the farmers. in this scenario that, the company is said to be a portfolio, they actually advance facilities to the farmers. So beyond the inputs that the farmers need, they are able to get in part of their income upfront, because you need to recognize that farmers sometimes have all these irregular income stream, and if you're able to understand the cycle of their crops, then you can sort of stretch it out. And most farmers don't really relocate, so they're quite traceable. And providing solutions through fintech or other indigenous means could be the answer. So we look for incomes for them. We also provide solutions such as training on how to improve the crop yields for these farmers, just so ultimately, even if it's the farmer's choice to sell to a third party, the net effect on the ecosystem would be positive, just so that the branding for the factory that we support then in the local community actually is strengthened. And we believe that ultimately, we think through these things in the long term. Ultimately, such programs may come back to benefit the factory. So most of the time, the farmers are actually not tied to the factory. They are not required to sell them to the factory, but the factory provides a readily available market at a decent price where they can then bring their produce and unwind any other sort of financing engagements that we've had. So that's the core element of our investment mandate, making sure that as much as the processing plants get the right investment and the right human support, the upstream elements, which is the farmers, which is the input suppliers, etc., are aggregated in a way that is efficient to manage properly for the company to operate better.
Okay. As we are already a little bit short on time, I would like to ask another question to Deji. When we were discussing about investments in Africa in very general, from the European point of view, a lot of companies says, yes, it's such a huge market. We definitely have to go to this market. We have to invest there. But so far, the people didn't invest a lot of money because, they said, okay, what is about the regulations? It's more a bit on the trial side. So how is it from your point of view? If you want to go to invest in Africa in food processing, what can you expect from your experience? The real first repayment, does it take 5 years? Does it take 10 years? I think we all agree you cannot go setting up a processing plant to no country in the world and say, yes, it should benefit you already after 2 years. But what would be your advice to investors in this respect?
Yeah, I mean, I think, and Brian will probably agree with me on this. One of the subjects that has been really that people have been debating quite a bit is the return profile, especially when you invest in the agribusiness sector. And I think people have to be very realistic about their expectation. So even if you're coming to invest in Africa and you are investing in processing, there are definitely challenges that comes with it. The terrain, infrastructure. We've talked about a couple of those elements. But then the other end of that stick is the size of the price that you are after. And I think if you are coming with a 1-2 year investment horizon, what we call portfolio investors, then that will probably not occur, for the outlook you have. You need to be able to have a mid to long-term outlook on, wanting to invest in the sector. And if you're looking at processing, it also depends on the value chain that you're working with, right? So depending on the value chain will determine the horizon you will put on your expected returns. So for example, if you're looking to do an investment in rice, depending on that, what kind of company you're investing in, early stage, greenfield, brownfield, then you begin to think about, do I need to integrate with a rice farm? Because at the end of the day, the paddy requirement is the life of the meal. Or are you in an environment where you can readily source for the meal, the paddy that you need, and you can immediately eat the ground with your meal and start producing? Those two different dimensions, we have a different impact on the horizon that you are looking at for your investment. And one definitely has more impact on your ability to fully utilize the equipment that you are putting on the ground. So I think to answer that question, I would say expectation has to be tailored to the investment you're looking at, and it has to be realistic in terms of the and investors have to be realistic in terms of the horizon that they have to recoup their investment on the continent. But yes, there are the opportunities, there is the market, and there will be the returns, but I think his expectation that it just needs to be managed.
Yeah. Okay, I think our session comes already to an end.
Yeah.
Even I think we would have a lot of arguments to exchange, what to abuse to exchange. But I think we can conclude together that I would say it's really interesting to invest in Africa. I think we all three agreed on it. That's interesting, that you really have to look on the market, to take care on the local farmers as well, to integrate them. And I think what Deji, what do yet, it's not let's say a short investment. You should have spent some time there to get your revenues afterwards. On behalf of AFC, I didn't point it out at the beginning. We are working as private consultants for private companies, but on the other side, we are working a lot for organizations like World Bank, GIZ, KfW, and sometimes we have very good opportunities as well to combine these public money, which you mentioned as well, Brian, these TA facilities with private investments as well. And I think this is sometimes a very good opportunity as well to reach success. So finally, I thank my colleagues, Brian and Deji, a lot. I thank everybody who has been listening to us for this short session. And of course, I think we are all available for further questions to be contacted by email or phone when you see them, the list of participants. Thanks a lot.
Thank you very much.
Yeah, thank you very much. Yeah.
Okay.